Hello, welcome everybody. Grisch Capital here. I'm Philip.
And
This
I'm
is
Jocke. Hello.
Jocke. Yes. And today we're doing a little bit of a different video. We're going to do a market recap. So recently, on Friday, a lot happened in the market. Everything just tanked after having a very good run up during the past several weeks and even half a year. So we're just going to talk about everything that's happened on Friday, how it relates to some of our stocks, some of the things we've covered, and yeah, let's get right to it.
I don't know if you actually know this, Philip, but I've made some posts on our YouTube account. I did one post about like OpenAI potentially investing in like a biotech company, and then I made another video post about my thoughts on the what do you call it? The semi crash here we had on Friday. But before I know what I think about it, but before I'd like to hear quickly from you. What do you think are what are your takeaways from this Friday move? Why did it happen? Will it keep going, in your opinion? And what are you doing?
So I'm not doing anything. It's a short answer. I'm just taking it chill here. I think one of the main reasons, from my understanding, that the market went down is because Trump and China again. There's a lot of back and forth between the tariffs again being brought up, and the sentiment just tanked because of that. But we know from before that it's not really come to fruition. And I actually just saw a piece of news that was posted 7 minutes ago that Trump is actually going to be easing the tariffs. So here, let's see if I can put this up onto the stage. All right.
Fantastic.
Cool. So here it says Trump downplays rift with China, says U.S. wants to help. So it will all be fine. Some key words there said on Sunday. So that was today. Okay. Also, comments from J.D. Vance that Trump would be reasonable in China negotiations. So Bitcoin and Ethereum have already rallied because of this. What else do we have? Trump's conciliatory tone comes just hours after China's Commerce Ministry issued its first official response, warning that it will not back down. So they're pushing hard on both sides, but I think they just want to make something work. That's what I believe in the end. So I'm not super worried about this. I think that it's, a little bit worrying that it keeps going back and forth and they're not coming to any agreement, but it's a difficult issue. So I think it's going to take some while.
Yeah. Okay. This is a very helpful news here. Just posted. Very interesting.
Yeah, 7 minutes ago or 10 minutes ago. I don't know.
I had no idea about that. Ethereum and Bitcoin has popped already. Okay, that's interesting.
Yeah. So I think it's going to be fine from this perspective, honestly. Actually, also, I don't know if you guys know, but there's rumors that Xi Jinping is had a stroke. That came out on Friday as well.
Oh my God.
Did you hear about that?
No, I didn't hear about that.
Okay.
What are the rumors? Is the rumor disproven, or why is it just a rumor?
I follow somebody on YouTube, and she goes into the depths of politics in CCP for the Chinese administration, and she believes that it is not rumor, and the reason is that basically it's come from several official sources that Xi Jinping has gotten a stroke, and he's had two before, but this one seems to be even more dangerous. Yeah, I had no clue, but that's what she said in the video. I was like, okay, what the hell? But anyways, she seems to, I don't know, I haven't seen anything about this on Financial Times.
And what do you think about, obviously it's on just being a human and a person is not nice, and if you has a family, but what do you think do you think that has an impact on the markets? Do you think people are speculating, okay, well then someone else is going to take control, and it might be, do you think markets will think of it as it's going to be more easy or more difficult with someone else doing the negotiations?
I actually think from a broader perspective, the negotiations, that's one thing. I think that the administration behind Xi Jinping is pushing the negotiations because Xi Jinping has not been part of any serious negotiations between US and China so far. Like he's not been really present at the meetings. So I don't think it'll change that, but it will change the long-term trajectory of the Chinese stock market, I think, depending on if Xi Jinping steps down and a new leader takes over. And everything will depend on who takes power, I think.
Yeah.
So there's some that are more pro-West, pro markets, and not as big government. And I think if somebody like that gets gets appointed, then it'll have very good consequences for the stock market.
And this is so interesting, but like what in the like markets don't really like uncertainty, right? So in the meantime, until they appoint someone, or do you think they will appoint someone like Monday, or do you think they will kind of like disguise it, hide it, and then it's going to take like a month, and in the meantime there's like uncertainty, right? Like who is it? Uncertainty and initially it's usually bearish, right? But
yeah, I mean that it could be the case, but I think that there's other things that's driving China apart from the political uncertainty, and I just want to show this. I guess you've seen this, but maybe not everybody has. But Alibaba, for example, has had a huge run just in the past few months, going from 120, even 100 here in July to up to 182. So
like 80%.
Yeah, there's a huge AI boom in China as well. That's the big point. And it's not been really priced in the same way as it has in the US, because I mean the AI boom in the US has already been during this time, and Alibaba was just like flat or down. But then boom, here finally we're getting some catch up. So I think now it's experiencing a significant drop probably because of this. So this could continue. I mean, let's see. I'm not opposed to that view. I think it's probably a good time to just like stay calm and hold. And wait and see what happens, honestly. But there's some tailwinds driving that could help alleviate some volatility, in my opinion. What do you think?
Okay, so that's very interesting to hear. Lots of great points, and obviously it sounds more bullish now after that comment from Trump.
Yeah.
And maybe initially it could be seen as a good thing, the whole Xi Jinping thing. But it's an interesting thing because it's a bit weird that the market crashed this hard on this Trump tweet of tariffs. If you think about what this market has brushed off, it's brushed off loads of bad things. And I got two things I want to say that people should keep in mind, I think. Obviously, I haven't really decided myself yet if I'm going to take any action. If you can't decide, I think inaction is kind of the best thing instead of just doing something impulsive, right? But I think this government shutdown could be pretty serious, right, in the US. And that can keep going for a while. I mean, it's been shut down before, and wasn't it shut down in 2018 as well, when in October you had a massive crash? And I think markets ignore it for like the first 2 weeks, first 3 weeks, but then they're like, okay, like what's happening here? And with already like pretty weak labor markets and job markets, right? If I remember correctly, they're weakening, right? And that's why the Fed is cutting rates. With already that plus government employees, you can have like 1 million government employees. This is high paying, good quality jobs. They get laid off. Like, what kind of thing does this signal to the consumer market? And I think like when I look at the streams, when I look at like Amit Stream, I look at future investing and the Crossroads, all these people, it's interesting because all of them and Polymarket, the odds are defaulting to, since there's no data, the Fed will have to assume the job market is shit and they're going to cut. Next meeting, they're going to cut. Okay. It's a 94% chance in Polymarket, and everyone online says that they're going to cut. But for me, I think that's really, really interesting. I think it's very interesting that people think that, because the Fed's favorite words and sentence are, we don't have enough data. We're data driven. So we're not going to make a move. We're going to wait. We're going to hold off until we see the data.
Yeah.
So if they're not going to get any data because of the government shutdown, why would they cut rates? Like, why would they assume that? They might be right. And since Polymarket is usually right, and right now it's 94%, but I would pay very close attention to the how the Polymarket odds move, like 30 minutes before the announcement, if they cut or not.
Yeah,
because
that's
maybe it jumps from like 94% they're going to cut all the way down to like, oh, now it's only like 70%. Then obviously someone is taking a huge bet and already knows what's going to happen. So that's something I'm going to watch.
Interesting. Yeah,
because it's fun. Yeah, it's very interesting. And retail has been very smart and good with this. But when I listen to the representatives of retail, they seem to brush this off as like nothing. They seem to they only focus on, it was this Trump tweet that made it crash, right? That's what they all say. It was this Trump tweet that made it crash. And I'm like, really? But he's tweeted about, these tariffs and stuff before, and it didn't crash. I mean, obviously in April was a big thing, but I just think it's a bit interesting that people seem to assign like all the value to these tariffs. I feel like maybe not now, but maybe the markets keeps crashing, and then Trump revokes all the tariffs stuff and says it's all good, it's all good, doesn't stop crashing, right? And people will be like, why is it not stopping? Why not? It was the tweet. The tweet did it. That tweet did not send the markets down. What the S&P, Nasdaq 3.5 and S&P 2 point something. I don't think it was that, seriously. It might have been
really?
like
but do you think that it's the combination of the government shutdown and the tweet, or what?
Yes,
or is the tweet not relevant at all?
I think the tweet could have been a trigger, but I think it's like a magician, right? As you saw a video from Jeremy Finance, and he said it very nicely, and I'm thinking about this all the time also. Like, usually the markets, they use something as a distraction, so you think this is what's going on, but in the background is something else, like what a magician does. Have a look at what's going on here, but in the background is doing something else, like some sleight of hand, right? The markets always do this. It's super weird. So you think you know what's going on, but you don't actually know what's going on. And it's so obvious, this tweet. That's like, is it really the tweet that made it tank this much? Because this is a massive fall. It's a massive fall.
Yeah.
And the market had already discounted the tariffs. People already know he's probably going to taco, or whatever they call it, flip-flop and then reverse.
Yeah.
People already know this. So why the fuck would it crash? It doesn't make any sense. It probably is crashing because of everything in tandem, but now the government shutdown is prolonged. It keeps going. So I think it's so alike 2018. But I guess there is a chance the market rallies on Monday because of something. But it could also be, I don't want to speculate here, but I'm not going to bet on it. But if I were to guess, I think it rallies on Monday and then crashes on Tuesday, or rallies Monday and then crashes like late Monday, like a super flip flop. Because everyone thinks this is like, as soon as it gets reversed, it's just buy the dip. But I'm not so sure.
Well, that's interesting. I think it's a good point there. With we never know what it is exactly.
Yes.
I totally agree with you there. But I think that you're downplaying the tweet a little bit too much, because so for one, I'm going to add this to the stage. I just found this quite interesting CNBC article. This is the stock performance of the S&P after government shutdowns previously. And if you just look, it's just the 100 days after, basically. Am I lagging, by the way? Or is it okay?
No, I mean, you're lagging like on and off sometimes, but it's
it's weird. Okay, fix that next time.
Anyways,
so 18% rally, 18 days, 100 days after the latest shutdown, and 36% after 1 year. Then we have a negative here in 2018 in January, but almost all the others are positive after 100 days of a government shutdown. And I think that they were forecasting this one to go for 21 days or something. I don't know. Let's see. But what I will also want to say is,
so this is for
one thing.
21 days on average.
What?
It would be cool to see more granularity.
Yeah, I agree. Yeah.
The longer the
'Cause that's the
shutdown,
thing. Yeah.
the worse the returns, or does it not matter?
No, yeah, exactly. But we can see at least from, since that
On average.
happened,
Yeah.
it's been going up until the tweet happened. And the thing also with the tweet is that China took a very bold stance against it. So one thing that I think is shaking the markets a little bit is that China has all these rare earth minerals. And it's not just like the mining of them, but it's the production and it's the processing. Yeah, sorry. Yeah, you're right. The processing of them. And the market's just scared that there's going to be a supply chain shortage that's going to create a bunch of inflation again, create a bunch of issues with the sales for international companies. And that could significantly weigh down the markets if this truly escalates. And I don't think China has that ambition, but if the threat that they're putting up is true, then that would have huge consequences. It would basically screw over all the companies in the West that rely on these, which is, quite a lot. So I think that's also one of the reasons why the market crashed so bad.
It probably has to be the main reason then. Or
maybe,
not.
yeah. I was
the
thinking
main
about
reason, but if I understand it correctly, Trump heard something about them doing this, and then he made a tweet, right? So this rare earth mineral, this was first, and then he tweeted about, I'm going to slap 100% tariff on them if they don't stop this bullshit. And then China responded again, like, well, then we're going to put a tariff on you. I think that's how it went down. It's good that you mentioned that, because that obviously has a way bigger impact on, now we're talking rare earth minerals and stuff, but or metals. And that's kind of, but Sweden's, we got more than China, so come here.
Bro, you wish we had more than China.
we got a pretty big lump of them, though.
Yeah, we do in the north. It's a good time for us to sell then. Maybe the prices are going to go up now soon, I guess. I don't know.
Yeah, but
I wonder how the prices reacted on rare earth minerals. Like what,
what did the futures do? It must be futures.
Let me look that up.
But I also heard a very, very interesting thing about, this is a little bit off topic, but kind of the same. So, Kalshi and Polymarket, all these prediction markets, now Robinhood as well. Apparently they take no transaction fees or, courtage or anything. Then no tax, you can use it for free, right?
Okay.
And I saw this video about this ex-quant trader, whatever. It sounded kind of smart, actually. They don't disencourage insider trading anywhere on Polymarket. So you can bet, will there be a protester on the next Super Bowl match, right? You can bet $100,000 on it, and you can go and do the protest yourself, and you'll win. Seriously,
That's
right?
So crazy.
Yeah, seriously. And why these markets don't have any disclaimers to not do insider trading is probably because, Bloomberg Terminal, how you can get data super fast. If you pay $1 trillion, you can get the data 10 milliseconds before anyone else, and with that you get arbitrage, right? That's probably what Polymarket can do as well. So they will sell this data APIs to everyone for a fee. That's how they make money, to get a ping, this just spiked just before this event, probably something's going to happen, right? And that can affect stock price, equities, and everything. But if you're like JP Morgan or someone, you can pay they might sell that data to them for I don't know, 300 million a year, and they'll get it 10 seconds before everyone else. They will have this spike in calls, and they will get in before everyone else. Yeah. I just thought it was really interesting, since we were talking about futures and stuff. I just had to mention
that's a crazy cool thing that you just talked about right there. Honestly, because I think that since so many people are using these prediction markets, I was looking at this. They have a million, several million, sometimes hundreds of millions of dollars
Yeah.
up on certain bets,
Yeah.
like the total pool. And that's a lot of capital getting put into these bets. And
Yeah.
I think that, if you're putting this much money into it, then, or well, cumulatively, then it should at least in most cases be true and represent the reality. So, for example, if a bet has a 90% odds,
Yeah.
then I mean, I would assume that would be correct.
Yeah, or
Um,
if the odds somehow move in a major way
yeah,
just before something is supposed to happen.
yeah,
Like
that's true.
obviously someone knows an announcement or someone knows. So that's how you could know, like maybe you will probably know by looking at Polymarket if the Fed will cut or not. Like
Yeah.
you'll know pretty fast if they're not going to cut. You're going to see the odds change like 10 seconds before they're going to change because someone
Mm,
puts a bet of like, $200 million and they like work for Powell. So they already know what the numbers are going to be, right? Or they know in some way.
yeah.
So you could like predict the future with this and the data that you're going to get from it, because insider trading is like, it's kind of allowed now, honestly. I mean, you can do it with Polymarket. There's no regulations at all. And who knows if they're going to regulate it? And how do you regulate that? It's very
Yeah. I
difficult.
don't know.
So this prediction markets can be like definitely, that's what Vlad Tenev, Robinhood CEO, talks about. Prediction markets is going to be, it's going to be the biggest market in the world.
Yeah.
It's going to be the main thing.
Oh, he thinks it's gonna be bigger than stocks
Yeah, I
and
think so. Yeah, I think so. Yeah.
but I don't like I don't agree with that because
No.
one big part of the market is just institutional investors, and it doesn't seem like
Well, they'll
institutional
buy the
investors.
data. They will buy the data. So, anyways, the whole ecosystem around it will be huge.
That could be, yeah.
You will need to buy the data in order to have like, what do you call it, alpha.
Yeah.
But this is the speculation, obviously, a little bit off topic, but we're just
Polymarket IPO.
whole market IPO. Yeah, exactly. Probably need to buy them.
I wonder how much what their market cap or what their valuation's at.
Yeah. I mean, probably very high, but yeah, it's interesting, and also, yeah, this rare earth. I think that's why, like Nvidia and AMD like tanked on Friday, because obviously you need loads of rare earth metals to make the chips.
Yeah.
You need it for everything, really. Well, you really need it for the chips, and the chips go into everything. So
Yeah.
that
Actually,
honestly, maybe I'm overthinking this, but honestly, a lot of data and numbers that have come out are not that good. But what I want to say, I'm still super bullish because we're in a AI super cycle, bull cycle. Obviously, this is obvious at this point, and it's probably going to keep going for a while. And you get interest rate cuts, although
yeah.
they, in my opinion, they might be paused. I hope not, but maybe.
Yeah.
And so you might see short-term pain, but I think in a year from now, the market is up.
Yeah.
But like definitely.
And another thing is it depends on where are you placing your money in the market, because there's a huge spread between the highest valuation stocks and those that perform best and those that have lower. And
Yeah.
the ones that have gone well have gone like really well. And the ones that have not gone well, they've been flat or down. So there's a huge spread in valuations. And my big thesis is, and I've been thinking about this for like a year now, and I was probably, way too early, but basically AI will spread obviously to every single company that will adopt it, and then they will gain efficiency from this and also profits by becoming, laying people off or getting better technology and so on. And then the valuations of those companies that are not the main Mag 7 or the wonderful whatever,
Yeah.
they will gain in valuation over time. That their valuation should catch up a little bit. And this is something that like the head of research at Fidelity was talking about. I saw a video with her, and she was talking about that when this spread is large, it's a good thing actually for the market.
Yeah.
So I think I think depending on where you position yourself, it could be interesting.
Yeah. It's Well, yeah, we'll see. I mean, I'm looking at the markets. One thing I was super surprised by is like one of my favorite stocks. You got Lemonade. It was down
Uh-huh.
10%.
How much?
10%.
Yeah, well, it's just
Like,
a high
yeah,
high
but
beta.
it is high beta, but it's in a way, it's not like the most. It's not the most. It hasn't run up the most. It doesn't have the craziest valuation compared to, like, you can compare it to Robinhood or SoFi.
Yeah.
Then it doesn't have a crazy valuation at all. So it's kind of interesting how that sold off, and they have Affirm sold off like crazy. You got,
Yeah,
I know,
blocking sold off like crazy,
lots of,
7%.
yeah, all of these companies sold off like crazy. Upstart sold off like crazy, and I'm like,
So
what?
fintech got hit pretty hard then.
Yeah, that's what I mean. And they're not related to rare earth metals. I mean, everything is one economy, right? But
Yeah.
it's a bit weird. You know what? Are
Yeah,
people going to
yeah,
buy
yeah.
life insurance because of a temporary rare earth metal hiccup? Like, it's
Yeah,
very bizarre.
yeah,
And
that's
that
true.
makes me think. That's making
Yeah,
me
yeah.
think.
Well, that's where I think that's where I think your thesis, what you're talking about earlier, could be correct. Actually, it's like, what's the underlying here? Because
Yeah,
when you look at fintech, like fintech has not been doing that well in general. Even though some companies have been doing better than others if they're performing better, but
yeah,
in general, they're not doing that great. And they are a derivative of consumer spending in the US mostly, which is where I think most of the revenues come from with the U.S. listed fintech companies.
yeah,
And the issue is what you were talking about earlier. It's like weak labor market, um, the need for rate cuts that have not come in a while, the consumer sentiment, uncertainty, complete uncertainty about business and investment in general, right?
yeah.
So I
No
think
numbers.
I think that's a huge issue actually, and I think it could be reflected in the fintech stock prices.
Yeah, and that's what I'm convinced the market is going to be. I don't want to jinx it, but it's probably up 100 days from now, or at least a year from now. But like, let's say this government shutdown goes on to like February, March, or something, like for a very long time.
Yeah.
Plus, you have rising tensions with this other geopolitical stuff and tariffs. Like, could you get a hard dip? Like, and wouldn't it be super ironic for the market to just do exactly what it did in 2018? Like, the dip was massive in 2018.
Yeah, I remember that.
And it's so massive that it's like, it's easier to do. You should just, buy the best stocks you like. This is what I do, and DCA. But if you think you potentially have something this massive, I mean, we're talking about, if you kind of time it, you can, or like,
Going against the golden rules here.
yeah, I know, but this is advanced. But I like this, so I like
Yeah,
paying
yeah,
attention.
yeah. Of course.
I
I'm
like being
joking.
active. I like
Yeah.
being active. You could just do the no-brainer strategy, but I want to try to get a little bit of edge here. But it's definitely against the golden rule. But if you suspect something like this happening, we're talking about, you could get double the stocks, kind of, and you wouldn't even have to time it that great. You wouldn't have to time the top, and you wouldn't have to time the bottom. You just get in and out somewhere in between. Not
Yeah.
everything, maybe just a third, and you can acquire twice the amount of stocks because of the drop. Could be
If it goes
huge.
down 50%, yeah.
And if it goes up, well, I guess you sold and you have cash
Yeah.
and you took profits while
Yeah.
you still
But,
have,
but, but what do you think? Are you thinking about selling some and then waiting and seeing and then jumping in if it goes down a lot or
No, I'm thinking to like buy bear warrants on Robinhood and Tesla.
Okay. And how come
Like,
those two?
because Tesla is just moving off of sentiment, right? And if sentiment gets crushed, they're gonna crash. Like, they're gonna crash massively because,
Yeah,
I
but
mean,
also if you think about the rare earths.
yeah, and the rare earth. So you get the
Yeah.
company and the fundamentals are doing terribly, and the only thing they're going up on is like, oh, robotaxi, which everyone is overplaying, by the way. But AI robots, it's very exciting. But once things that are exciting are no longer exciting because everything is getting crushed in the market, you know, Tesla probably goes down 75% or something ridiculous in a short time. I'm exaggerating a little bit, but
Yeah, no way it goes down 75.
But if you have
I don't-
if you have a leverage play on that, you can make 500% in a month.
Yeah.
If you have a leverage play like a warrant, if you buy a warrant and it goes down 30%, you probably make 400 or 500%, depending on where the strike price is.
Mm.
So,
Okay, so that's
you can
what you're saying.
it would be like a
Yeah.
hedge. You could hedge your portfolio, and I would do it on Robinhood because every time the markets crash, Robinhood crashes harder than the markets. It always happens.
Yeah.
The only thing, which is very tricky, this thing though, because you got earnings coming up, and earnings are going to be amazing from all companies. They're going to be, amazing. And if the Fed cuts the next time they're supposed to cut, I mean, we're a Fed cut cycles plus all the earnings are amazing, beats across the board. It's almost impossible to tank the market when that happens. So potentially it could be a 2-week crash now for 2 weeks, 1 or 2 weeks, a massive crash. And then we just rocket ship up. You get the same thing as in April almost.
Yeah.
It's like, it's so difficult for me to actually get bearish because I really think this is like a huge AI revolution and all this stuff, right?
Yeah.
Then you get don't fight the Fed. But if the Fed waits and we got earnings coming in like 3 weeks, doesn't the market have time to go down a lot if it wanted to? Stop loss to get triggered, margin, bunch of stuff.
Yeah. Yeah. It's interesting. I mean,
If you were to bet, what like I know you don't, but like what is your? Let me hear your take again here, like and even more broad.
I mean, in general, I mean, basically, I think that everything depends on, like what the leaders of these countries are communicating, right?
Mm.
And it can change from every day, any day, honestly, just like it did today, right? But I think from like a fundamentals perspective, um, there have been a lot of companies that are running like crazy. Like Robinhood, I just checked, up 450% in 1 year. Crazy. It's a $125 billion company now. And there's other ones that are also just running like crazy. And I think all these companies that are running up like crazy have the fundamentals with them, but as the fundamentals are increasing as well, so is their valuation. So the multiple is going up as well.
Yeah.
I don't know which one's going up more, but that's something that I would be a little bit scared about buying into right now. And for me, I'm just looking at the sidelines, and I think it could, like, the market could go down 10%. It could, like, I don't, or 5% maybe, 5-10%. And if it does, that would be a big drawback. For the total market, that's a large amount. So I would be looking to buying and adding there.
You have cash.
Yeah.
Would you build
And
cash tomorrow? Let's say the market goes up 2% or 1.5%, 1% plus. The Nasdaq is up 2%, S&P is up 1%, and all of the high beta stocks are rallying. Would you be like, will this pull back tomorrow brutally? Like, would you liquidate more cash just in case, or would you do nothing?
I would maybe look to have like 10% cash, maybe something like that, 15. So for me, that's what I have now about.
Yeah.
So that's where I would be. And if you don't have that right now, then I would look at your portfolio. I would look at my portfolio and be like, okay, which companies have made a significant run where I have a really good IRR, like, like maybe it's run up a lot in the past year.
Yeah.
And I would just say like, okay, I'm happy with this. That's what I was thinking when I sold Palantir. Like, it went up 10x in 3 years. The IRR was like nearly 100%. So I was like, okay, this has been a great return. This is like, if the market does 9% over time, and I just did 100% every year for 3 years in this stock, then I think it's reasonable to sell.
Yeah.
And that was kind of my thought process around it. And I would do the same if there's something that's run up a lot. But then you never know, like, because with Palantir, yeah, it just kept going. So
Just keep going.
so it's just a crazy time. It's completely crazy. But I think what you need to remember is you need to be long term. Like, all this will happen up and down, but you need to be long term and just pick good companies that can weather through this storm and that can
Yeah.
weather through administrations.
Yeah, that's a very good take, I think. So you already have cash. You're kind of well positioned all the time for anything, really, which is a good thing, right?
Mm.
And if it goes down, you just buy more of the stuff you like.
Yeah, that's what I'm thinking. Something like that, or maybe going into some new names. I was looking at Amazon. I was just thinking because it's the biggest company. It's like part of the Mag 7, but it's
Done
gone
nothing.
up like 5% this last
Yeah.
year or something.
Yeah, and they're
So
really good at what they do. So, and they're good at
yeah, and
everything.
AWS backlog is huge.
Yeah, yeah. It's a bit interesting for me because I think I'm in a lot of these high beta names. You call it beta? Yeah, beta.
Yeah, yeah,
Very volatile.
yeah,
And some of them are like they've run hugely. I fell into this trap before also, really. Still doing well, but
yeah.
it's like for example, IREN, Iris Energy. Have you heard about IREN? They're a data center build out.
No, no, I haven't.
So basically, what they do is that they're up 600% this year.
Oh,
Six,
IREN. Yeah, yeah, I've heard of them. Yeah,
they're up 600%. And I didn't buy at the bottom. No, no, no. I don't know. I'm up on IREN now, but if it keeps tanking, I'm not going to be up. I'm
yeah.
probably up 60% because they just keep rocketing up. But
Wow.
it's so interesting because they're like a $10 billion market cap. And I just want to share my dilemma here. They have run like crazy. So if the market crashes or goes down, these are going to crash like crazy. Okay. They're going to go down. They're going to go down 70%. Absolutely. No doubt about it. And that's just like a 5 to 10% pullback in the S&P, and IREN is down 70%, guaranteed. But the thing is, they're a $10 billion company, and they have enough data centers already built out and secured land and permits close to power plants. Like they've done this before because they were a Bitcoin mining company before, right?
Ah,
All they do now is take out the Bitcoin GPUs and put in the Blackwells. Like that's what they do. And instantly they have higher profit margins and more revenue for this data rack. And they can just do that for all the data centers they have. If they manage to do that, their revenue in data center with what they already have secured, they just need to deploy it and plug them in. Their revenue, I think their ARR should be like 30 billion a year. 30 billion a year, and right now it's 1 billion. And AI is contributing 500 million at the moment because it takes time to switch these out. You have to acquire the chips. But
yeah,
the difficult thing is acquiring land close to a power source and building the actual data centers. Super
yeah,
easy to just plug them in.
yeah. That's
You already
the problem. That's the
Yes.
problem. Electricity.
Yeah, but IREN already has all their electricity. They've already signed these deals.
But can they sign for 30 billion, you think, already? That seems
Well,
like a
no,
big
they
number.
already have it. They have already secured the land close to the power plants and everything. You have to look into this. But the thing is,
Yeah.
so obviously, if they make 30 billion in ARR, if they can deploy this within 3 years, and it actually happens, like this company is 20xing from here, like easily, like this.
Yeah.
But in a small pullback, they're going down 70%, guaranteed. That's just what happens. So it's like, okay, would I rather have, 150% more of the company if I kind of time it? So do I sell like half of my position now? If it doesn't crash, it still rallies and I multi-bag. But if it crashes, you make an unreal amount of money, for
Yeah,
this.
that's a
This
that's
I
a
got
good question.
multiple ones of this.
Yeah, that's a good question. Oof.
The upside is so huge if you
Yeah,
manage to time it a little bit.
yeah.
So Yeah.
That's a risk. I mean, it seems like a risky kind of play in
Yeah.
general, just
Yeah.
because they have a lot of revenues that's far out.
Mm.
But that being said, if they can secure this, and given that AI is still hyped, they still need to have that demand
Yeah.
in the future,
Yeah.
which they probably, to some extent will. Um, then yeah, it'll be a good play. I don't know. I don't know if the valuations already reflected that though. They have 10 billion now on 1 billion of revenue.
Yeah.
So they're like 10x sales. Maybe
Yeah.
that's I don't know, for a data center. Like I feel like data centers is like, I don't know, sort of a commodity in that industry.
Yeah.
So uh, just gut feeling it's like pretty high valuation, but given the projections, it's good. I just don't see it as I just wonder if, is this a real company really? Like
Yeah.
they just switched from Bitcoin probably because at first they were making a lot of money in Bitcoin and they're like, okay, yeah, let's just do this. And then they're switching to data centers.
Yeah.
But like, is this a real company? Like, do they have a culture? Do they I don't know anything about them. So
Yeah.
but I'm just questioning this because
Yeah.
if they just do this switch, and I know a lot of these like miners are doing the switch to
Yeah.
I don't know. Is that sustainable? The,
Who knows? I mean,
yeah.
probably not,
But a
right?
60% gain is good. Like what percentage of your portfolio do you have in this company?
7%.
7? Okay. But it's still a bit. Like if it,
Yeah. Yeah.
I mean,
So
that's a fuck. I would take the money and run. But I don't know.
well, I think IREN, like there's a reason I haven't invested in any of the other miners, right? So I have done some due diligence on IREN specifically,
Okay.
right?
Okay.
And the other ones, and chosen that IREN is probably the best one. And it's quite interesting because you can find, 5 years ago, you can find kind of like info about IREN and their what they call their earnings calls. You can hear the CEO statements, and they're talking about like they're really just they think data centers are going to be around forever. So what they want to be is like a data center factory. That's kind of what they want to do. And
Okay.
at the time, Bitcoin was the best ROI. So that's why they mine Bitcoin.
Okay.
Now AI is the best ROI. So now they're going to do AI. And so if you think of it more as a IREN specifically, then would be, is it an AI factory that can like build AI factories or data centers of any type faster and cheaper than anyone else?
Yeah.
And deploy it faster.
Yeah.
Then
That's
it's
cool.
actually interesting.
Yeah.
It's interesting. They're not just a Bitcoin miner who pivoted.
Yeah.
But we could get into IREN, do a little deep dive there.
Yeah,
But
yeah, that's interesting. I'd love to hear more about that actually. It's
totally get your concerns of is it a real company? Is it flip flopping? Because at first glance, but that's also where kind of alpha. Because it's super easy to just look at it and be like, oh, they're a Bitcoin miner, they flip flopped, like or like
Yeah.
they're just like they're desperate, they're just switching.
Yeah.
But are they actually? Is that actually smart? I don't know.
Exactly.
It's like you have to deal with OpenAI and AMD, which is like this power cord plug-in itself.
Yeah, I know, right? That's
Plug-in itself. I really want to find the image.
that's hilarious.
Power cord plug itself. I want to see here. Yeah, like this one. Share this tab instead. Let me see here. This is like, infinite power loop.
Bro.
OpenAI is going to buy $100 billion worth of chips from AMD, and AMD are going to give them stocks worth $100 billion. I'm happy about it. I'm very bullish on AMD.
Yeah.
But I think it's actually quite interesting. We've never seen, I don't think at least we've seen this fast, like of a build out ever with this kind of prices, like this much money. Obviously, I understand OpenAI, in order to buy this chip, they need collateral some way. So they need for someone to take this risk. did it to say, well, we're going to get this company if we buy the chips. So that's collateral right there, but it is real revenue. And, it's not unheard of in other industries, but it's kind of interesting to see how the little power.
I agree. The AI incest continues, but it doesn't need to be a bad thing, I think, in some cases, right? No. It's just natural development. It's still a very new market in many ways. So it could just be necessary to boost the next generation. I mean, if this leads to a bunch of innovation, that's going to be awesome.
Yeah.
I think it's going to be, then it's worth it. You know what I mean? And not that weird. Yeah. So I don't know. Let's see.
So do you have anything else on your mind? And then I think I want to hear your final thoughts again.
I think I'm ready to go through the final thoughts again. I want to hear yours as well then. So I can start then, and then I want to hear yours to end it off. Like what the situation is right now. Yeah. So in general, a lot of back and forth tweeting, creating crazy markets, but underlying trend is actually shaky, which I think you mentioned really well. I'm not sure how that's going to develop, honestly, but I think the bottom echelon of companies that have not done very well but still have good fundamentals have a lot of room to grow, and I hope that fintech recovers as well within that sphere, and also big companies like Amazon. So I think it's important to look out for those types of companies if you want a more like lower risk, medium to high reward type of company. And then there's the companies that you can chase. I mean, I thought, maybe, when back in April, Robinhood's overvalued. Like, no way, it was at 34.
Yeah.
Oh my God, it's at 138. That's just insane. So, yeah, I mean, that's just my kind of takeaway for now. I want to be open-minded, honestly, because there's so much rallying right now.
Yeah, but you're not changing the playbook. You're like, I'm just gonna keep sticking to the golden rules. I'm
right now. I just have like too much on my plate. I'm not gonna try to do any crazy stuff. I'm just trying to survive at this point.
Live.
Seriously.
You're going into some battle I don't know about here, or?
Yeah, several.
Yeah.
All right. What's your take?
It was good to hear your calming, sensible takes. Good role model. I'm a little bit more, of a rogue here, I think. But
yeah, that's good. I like it.
I think if the market rallies on Monday, I'm gonna buy bear warrants on Tesla and Robinhood.
Okay.
For maybe 2 to 3% of my portfolio.
Okay, that's reasonable though. It's not.
Yeah, because these can 10x very quickly if it actually crashes, and if it rallies on Monday, you can get a very good price for them. Very, very good price. If it crashes on Monday, I will be like, it might be too late to do it now. They're going to be super expensive. And if the market kind of does nothing, I might buy warrants. But I think, I'm gonna basically stick to the playbook with a little bit of protection with warrants. I don't think I'm gonna sell any stocks, because I should have sold lemonade, on Thursday. I'm already down 10% on it. I'm not going to sell it now. I still think it's super undervalued. I think it's going to be $30 billion, $60 billion company. That's 20x from here. Yeah. So it's like, I wish I could get more shares, but I actually have like 20% cash. Nice. If not more already, like before this. So might be too much, but so I can buy the dip anyways, and I'm going to add some extra protection.
Yeah.
But I will be looking at like the VIX. If the VIX, the volatility index goes above 30, I think I'm going to buy quite heavy if it does that.
Yeah.
So that's what I'm going to do. And I'm not going to sell IREN, even though it might go down like crazy. I'm not going to sell Lemonade, even though it might go down like crazy. I'm not going to sell AMD. I'm not going to sell my AMD warrants either.
Those have gone pretty well this week.
Yeah. But the thing is, I think AMD, I think it was very interesting. One last thing, Lisa Su. Okay, so that's my thoughts. We can close that. That's my thoughts. What I'm going to do. But Lisa Su, when she announced that OpenAI deal, she said, I think word for word, she was asked, "Oh, this is your largest deal, right?" And she was like, "Yeah, this is our largest deal we've announced by far." And it's not that by far or so far, that's the key, but it's the largest deal we've announced.
Yeah.
Why would you say? She didn't really. Maybe I'm reading into it, but she never misspeaks, Lisa Su. So she could have just said, "Yeah, it's the largest deal by far."
That's interesting.
Like, why would you say that's the largest deal we've announced by far? Maybe it's a bit conspiracy here, but it's a bit. She chooses her words carefully. She said announced so far by far. So I think the thing is, if they announce more deals like with Oracle and Microsoft that are anywhere near in that ballpark, AMD is going to $700 billion within a year, even if it crashes temporarily with the rest of the market. And obviously, I don't have a crystal ball. Maybe this rare earth metal thing is going to be a huge thing, but for me, this is just talk at the moment, and you should never act on talk. This rare earth metal thing, like that's actually buying opportunities usually. When people talk about stuff and they panic, but it's not real. It's not even real yet. It's just talk. And that works both ways, right? With deals, one is not in yet, so who knows? But I think if she announces more deals, Oracle, Microsoft, or anything else, like who knows, like how high AMD can go.
That's super interesting. Yeah, I think that's a good catch on the voicing there. Like, it could definitely be something, and I wouldn't be surprised if it continues to go because they have really good fundamentals. So let's see.
We'll see. Yeah, it's going to be very exciting, at least, to see what happens.
Holy shit! Let's touch back base for a weekly update next week. I think this was fun.
Live stream on Monday. No.
Exactly, live stream. Jocke's sweating balls. I'm just chilling.
Like you should panic and like give me some advice.
I'm just like, bro, why are you? What, you're gonna do this for 10% gain? Bro, relax.
About 10%.
No, I'm just kidding.
Well, when you're poor, Philip, you're hungry. That's the thing. All jokes aside, I think it was great to hear your take on this.
You too, man. You too.
Episode went a little longer than expected, but what Philip is doing, and you know what I am gonna do in different scenarios. And obviously, none of this is financial advice. It doesn't even matter that we say this is not financial advice. You should not interpret it as financial advice either. This is just like I don't know, more like therapy.
Therapy. That's a good one, actually.
But
you need to have a license for that as well.
Yeah, goddamn, everything is illegal. Like, what can you do? I mean, but I think that's where we're gonna wrap it up.
Yeah, let's wrap.
Thank you for watching the video.
Check out our website if you haven't already. GrischCapital.com.
Shameless plug.
We post our best stocks for premium, and we also have stock analysis for all users. For example, we have not done AMD yet, but we have done Klarna recently.
Yeah.
Look at these graphs. Just beautiful.
Beautiful.
So check it out if you haven't yet, and give us a like, subscribe if you enjoyed this video. I think we're going to do hymns next, so be on the lookout for analysis of hymns.
Yep. And leave any comments. We'd love to hear your takes about the situation we're in right now.
Yeah.
What do you think is going to
on in
happen
the market?
today, or what's going on? What are you doing? What do you think of our takes? Do you think it's like the underlying is actually making the market go down, or is it just this rare earth metal China thing?
Yeah.
All right. Thank you all
right.
very much. We'll see you in the
Peace.
next one. Bye-bye.
Thanks, Jocke.